I sort of had this light bulb moment. It's kind of like I came to this realization, wait a minute, there's this asset class out there in the world called art that's almost $2 trillion in size, but at the same time, almost no investors have ever actually thought about investing in it. Hi, my name is Alan Sokolitsky. I'm the Chief Investment Officer here at Masterworks. I worked at major institutions like Citigroup and then spent most of the rest of my career at Goldman Sachs. The one binding element across all of the roles that I had at these institutions was that I was researching, publishing, and communicating views on all of the major asset classes that investors typically invest in. What I found so fascinating, though, about art when I started researching it is that art itself has existed for centuries, probably longer even than stocks and bonds if you really think about it. But there have never really been a lot of average investors who were able to sort of approach and access the art market. If I said to you, name the first words that come to mind when I say the word stocks, you would probably think to yourself, profit, returns, earnings, sales. If you said to someone, what are the words that come to mind when someone says art to you? You would probably say artist, painting, museum, beautiful, picture. There are not a lot of these sort of financial oriented terms that are associated with the art market. And so we're sort of trying to reshape the manner in which a lot of investors are actually thinking about the asset class. I would say that in general, there are probably two primary reasons why we think investors should consider investing in art. If you go back in time several decades, the segment of the art market that we invest in, it's called post-war and contemporary art. That segment of the art market has been appreciating over time at about 12% annualized. The asset class that most investors invest in, which is stocks, that asset class has been appreciating over time at about 9% annualized. The second element is around this idea of correlation. How similarly or differently do two types of investments move relative to each other? When a lot of investors are building portfolios, they try to look for what's called low correlation asset classes. The reason you might want a low correlation asset class is because since it does not move like other asset classes you might invest in, its movements will offset the movements of everything else in your portfolio, and so the overall experience that you get in your portfolio will be less of a sort of volatile up and down, almost like a roller coaster experience. The ideal, so to speak, would be to find an asset class that has a low correlation to just about anything. If you include an allocation to art in your portfolio, that art allocation is not going to have a correlation to anything else you have, no matter what it is that you might have. You might be wondering, where are they even getting all of the data, all of the information to answer all of these questions? The art market, up until recently, was actually not very digitized. What we had to do in order to get all the information that we needed was to go through thousands of these auction catalogs that we bought from everywhere, going page by page and taking every single data point there and putting it into a computer or a database. So what ended up happening after 2 years of this monumental effort is we put together the most comprehensive source of data on the art market that frankly has ever existed on the planet. The question we wanted to answer is, how frequently or infrequently does the portfolio with art do better than the portfolio without art? So we ultimately did that. One of the portfolios that we started with is probably one of the most widely used portfolios in the US, if not the world. It's what's called a 60-40 portfolio. For the 60-40 portfolio, we went back in time and we measured its performance for many, many 5-year periods, and we also measured its performance for many, many 10-year periods. So we had that data available. Now let's take that 60-40 starting point and we're going to add 5% into art and redo the whole exercise. So we took the portfolio, the 60-40 with that 5% allocation, and what we found is that in 98% of those historical 5-year periods, the portfolio with art had stronger performance than the portfolio without art. And in 100% of 10-year periods, the portfolio with art had better performance than the portfolio without art. So what this analysis basically showed is, at least on a historical basis, making something as small as a 5% allocation to art in a portfolio might very, very frequently, at least historically, have improved the performance of the portfolio. There is old masters paintings that were produced hundreds of years ago. There is impressionist and modern art from 100+ years ago. And then you have post-war and contemporary art, which is pretty much everything after 1945. The segment that we focus on is post-war and contemporary because historically speaking, that segment of the art market has had the strongest performance. But are we buying anything and everything within post-war and contemporary? And the answer there is also not at all. Generally, we focus on paintings that are roughly between, let's say, $500,000 up to $30 million. The reason we don't generally focus on paintings that sell for over $30 million is, number one, we found that the performance is not as attractive at those very high price points. At some point down the line, we have to be able to sell that painting in order to give our investors distributions back. Well, once you get to those really, really high price points, the universe of individuals and families and intermediaries around the world who sort of have the capacity to buy, $30+ million paintings starts to get quite small. We also generally don't focus on anything that sells for less than $500,000 because that segment of the market comes with significantly more risk. So our sweet spot is roughly in the middle there. In all my years of researching lots of different asset classes, the art market seems to have this extraordinarily unique dynamic in it when it comes to supply. The closest other asset class that has supply as kind of an important part of what makes that asset class function is commodities. As an example, oil markets. The supply of oil that's available is going to be a big determinant of what the price of oil will be. Now let's compare this to the art market. Once an artist passes, the supply of art for that particular artist is now forevermore capped. Pablo Picasso is not painting any more paintings because he passed. So we think that that type of attractive supply dynamic that's so built into the art market is one of the things that gives its merits as an attractive asset class. What I've done sort of from a research perspective, I kind of went back in time and I was curious myself, how did art performance compare relative to the performance of the stock market? Was there any sort of interesting or discernible pattern? And the reason I wanted to do that is because if you think about the current environment that we're in now, so the Federal Reserve, which controls monetary policy in the US, it has hiked interest rates at the fastest pace, literally in decades, up to now 5.5%. So that's already a little bit of a headwind for stocks. And on top of that, by virtue of interest rates rising, that's also kind of a headwind for bonds. So as of 2009, literally at the depths of the financial crisis, that was the worst decade that stocks had. And during that decade, the art market had among its strongest performance in a very long time. One of the best decades for the stock market was as of the end of 2021. And during that period of time, the art market had, on a relative basis, actually among its weaker performance. So now the question is, given where we are today, what does the outlook look like for the coming years? So I already talked about how interest rates have been moving higher. That's challenging for stocks. And so if a lot of those historical patterns that held before are going to continue to hold, that for us tells us that there is a good chance that the art market is actually going to perform quite well in the coming years. Art itself, it has existed for a very long time, literally centuries. And while it's been available for so long, by definition, there have been a lot of wealthy families, a lot of wealthy individuals, a lot of institutions that have been transacting in the market for a very long time. So the only thing at the end of the day that's really new about art is just the latest iteration of how it's evolved. Are there new ways to acquire art? Are there opportunities to invest in art? So perfect example is a lot of investment managers in the world who make investments on behalf of investors. In this day and age especially, they work off of a considerable amount of data that their analysts will spend countless hours analyzing, building models, sort of doing all of this research to help inform their investment decisions. We have the luxury to do the exact same types of exercises. So we have data scientists here that are analyzing the data, building models, literally making a lot of the same investment cases for why we should buy this painting, not buy that painting, all the same type of decisions that analysts at other investment firms will be making for those particular strategies. We've now been doing this for a number of years. Our platform has grown immensely, so we're managing, as of now, almost $1 billion in assets under management. We have investors from 18 all the way up to the 90s. They by no means have an expertise in the art market, But one of the things that my team is very much responsible for is to provide a lot of that kind of educational support, understanding the asset class, what are the merits of the art market, and so definitely check out masterworks.com. It's really exciting what we're doing here.